There is a huge opportunity. Next 20 years is going to be a great place. India is the opportunity. I have a big pull on India.
So going back into your journey, because you bagged Safari when it was literally at 200 crores in terms of market cap, saw it till it got to 10,000 crores. Prath's recent investments from the new fund have been Jimmy's Cocktails, Assembly, and Aukera, all very interesting consumer businesses being built in India.
We met Sudhir on Rebound and we just loved it. Acquired this in 2012 in the luggage space and had created the largest company in India. And then he got out from there and then he got the opportunity to acquire this brand, which had been Lagarde, had been languishing, not growing at all. He was at 60 odd crores in top line. And within a year of acquiring this, he had brought that business to 150 crores.
Your experience of seeing that must have been a phenomenal learning experience for you as an investor.
Don't know of any business which fails on an Excel sheet, right? In real life, it's very different.
There's also a shift to safety, right? Like,
Yes.
focus on liquidity, focus on maybe
Correct.
public markets or even later stage funds where, there is some more assurance in terms of, returns.
Growing businesses to 200 crores has become far easier. We are seeing that happen across the board. That's why I see that value creation will be different. If there will be 500 brands or 1,000 brands which will get across this number, not all of them are as valuable, but they don't become zero.
Welcome to the India Opportunity Podcast. Our guest today is Piyush. Piyush is the founder and managing partner at Prath Ventures, a new venture capital fund focused on investing in early stage consumer businesses. Prior to launching Prath, he was a partner at Tano Capital, a private equity fund of $200 million and assets under management, where he backed phenomenal success stories such as Arohan Financial Services, which is an NBFC company, and Safari, the travel luggage company, which he saw grow from a market cap of 200 crores to over 10,000 crores. Prath's recent investments from the new fund have been Jimmy's Cocktails, Assembly, and Aukera, all very interesting consumer businesses being built in India. They ideally want to be the first institutional investor when founders are raising their seed or Series A rounds, and the first check for them is usually between 3 to 15 crores, which is roughly 500K to 2 million US dollars. Excited to deep dive with Piyush into the consumer landscape in India today and his plans for Prath in the future. Founders who are building consumer businesses, you will gain a lot of rich insights from Piyush's experience about business building as well as fundraising. Welcome, Piyush. How are you doing today?
Very well. Thanks, Shrishti. Lovely to see you.
Lovely to see you as well. Thanks for coming on board. I know you've just wrapped up the fundraise for the fund and had your AGM also recently. So it must have been a very hectic last few months. But very excited to deep dive with you in the consumer space today and learn more about what's going on in the industry. But ideally, I like to start with people's first and most formative experiences, and that's usually the childhood. So let's start from the very beginning. Would love to learn more about your early years and what you were like growing up.
So, thanks, Shrishti, for having me. It's a wonderful way to start. And I think when you ask this, I realize that this is not something that I do very often. I don't delve too much in my childhood. There is too much which is I think has happened in my working life. But when I think about my childhood, I think it was nothing which was out of the ordinary. I was part of a large joint family, middle class, relatively well to do. I was very studious from very early on. I think it came naturally to me. Math sciences were my favorite subjects, spent a lot of time studying, had a good group of friends, spent a lot of time doing nothing. I think that's what childhood used to be. And
Yeah.
when I see my kids, their childhoods are so much different when they are playing versus when we used to be playing. It's very different. It's very structured for them. It's good. It's great. But I think we used to have a lot of fun growing up. I think in a lot of ways I was also maybe a compliant child. I would do what I was told, and a lot of people who know me very well will find it very difficult to believe I that's not who they will think I am today. But but yeah, I think at home it was a very sheltered childhood. It was only after I left home for my post graduation, and then kind of just that was never really went back to live with my family is I think I started developing a personality which was very different than what it was before leaving home. So I'm thankful for my parents and my family to give me that sheltered childhood. But I think everyone who sees me today and who've known me as a child will think of me as very different people.
Yeah, that's very interesting. I, similar to you, grew up in a joint family and also felt the same actually when I stepped out into the real world that, you grow up in such a joint family is a very sheltered environment, I would say. And then when you venture out into the world, it's very different. But, what you said about kids growing up today, structured versus unstructured time, I think I see that so
Yeah,
much more now. I'm a young mom who's also seeing this new trend where even at the toddler stage, we are enrolling them in different activities, music
yeah,
classes, paint classes, and all
absolutely.
of that. Whereas, growing up, I don't think we did a lot of that. But, of course, that's a very interesting theme that you pointed out. But, Piyush, I find your journey very fascinating. You started your career as an equity research analyst with First Global, then ventured into investment banking, then held a partner role at Tano Capital for 15 years, and now have launched Prath, an early stage fund, to back companies at seed and series A. That's a lot of depth and exposure to various stages of business building. Were these conscious decisions about sharpening your skills to learn everything about the investment business? And what have been your key takeaways that eventually led you to launch Prath?
Right. I would like to claim these were conscious decisions, and I moved to this by a grand design. But I think it was very different back then. I passed out from my MBA college in 2000, and all I knew was I wanted to work in finance. At the back of my mind, because I came from a business family and it was a very large family. Everybody around me was in business. So somewhere it was there that I wanted to be an entrepreneur, but I think I was some way away from there. Uh, I would have loved to work for anything in finance. Thankfully for me, equity research happened. I loved doing equity research and learned a lot doing that. I think your first job has a lot of impact in the way your thinking evolves, and I'm thankful to First Global, my bosses there, for shaping my thinking and making me understand how to look at companies, how to understand what value creation is at that very. I think all of this used to be alien. A lot of what one should read or understand in MBA college, I think I learned in my first job, and then every experience I think prepared me for what I'm doing right now. I spent a few years doing investment banking after that, and that's where then my boss, super boss, Hitul, was then setting up this fund at Tano, and he said, "Why don't you come along?" And I don't think I took more than a few seconds to decide. And Tano, I spent the most of my career. I spent about 16,
Yeah.
17 years there. It was great. It was a wonderful journey. It was somewhere I learned investing a lot. I learned private investing a lot and how it is different from public market investing, and what unlike public market investing, private, a lot of the value is created by what you do after investing as well. It's not just identifying the right sector and the right company or the right founder and then riding the wave with that,
Yeah.
which is also very difficult to do. So I have been a public market investor, and I know what it takes to do that over a long period of time in delivering returns. But in private markets, how you are able to work with founders is a very key skill set. And I think very early on, I started realizing I loved working with founders. I loved working. Initially, it was more learning from them, but in contributing in whatever little way I could. But having this ringside view of how businesses were getting formed and growing, and it used to be usually growing profitably back then in private equity days. So
Yeah.
it was great. I think that allowed me to also become a better investor, I believe, because you saw the challenges day to day of running the business. Were where were the key challenges coming for founders as they were building that in those businesses, and what are the things that did not work out? When I've been doing this for long enough now, 18, 19 years of investing experience has allowed me to see so many companies which have worked out, companies which we did not invest in, how they did, companies that we invested in obviously close up, and I think Prath was a natural choice after this. I knew that I wanted to be an entrepreneur. In fact, I remember even in my MBA college, on the placement day, somebody asked me, "What do you want to do?" And I think I didn't take. I instantly responded, I wanted to give employment to 1,000 people, and it. I think because of kind of just coming from business family, that came to me naturally, and it while directly I don't think as a VC fund I can employ that many people, but it's something that you facilitate, right? By investing in
Yeah.
companies which themselves give employment, and being a founder, coming to setting up your own fund and doing this, I don't think it's very different from what I was doing earlier. It just the responsibilities have increased. You rather than getting a paycheck, even though you are a partner, you are giving paychecks. I think it's really satisfying to kind of do that, being able to make a difference uh, to a lot of companies. Hopefully, be able to partner them in their growth, which is what we are kind of trying to do at Prath.
I love it. I think, we are getting Devina Mehra also on the podcast, by the way,
Oh, very nice,
from First Global. So I'm looking
very
forward to
nice.
that conversation. But I think she's also had a phenomenal investing journey so far. But, I want to deep dive on the stage selection also a little bit. Given that you had exposure across different stages, why did you specifically choose seed to Series A?
Right. So I think it was both sector and stage that we selected. Maybe I can try to answer because both are related to each other. But at the same time, if I were to focus on stage, we just found a gap. So both Harman and I, and we knew each other for more than a decade, as more as friends and peers, and we started talking about setting this up in early 2022, and we spent a lot of time as to what our strategy should be. Where would we want to kind of set this up fund to do? What should be the objective, long term objective of what we are building, and where should we make a start? And both of us loved building businesses, especially consumer businesses. I think as investors, where you get lucky, where you see success, it kind of seems like you start to understand that more. And both of us had seen fair bit of success on consumer side, and also opportunity was moving there, and hence we said, okay, we want to set up a consumer focused fund. And when we looked at the market, we saw that there were only a few funds that were focused on doing this at the stage. While there were a lot of people who were doing this as a sector agnostic way, early stage investing is
Yeah.
today the number of investors just is there is large number of investors, both institutional as family offices as well as angel investors. But doing this in a focused manner, where you come with the just when you focus on a particular sector, I believe you bring some discipline and science to it, and your ability to add value to the companies also increases far more. With that, we said, okay, let's do this, and this seems like a great opportunity because so much was happening in the early stage consumer ecosystem, which had never happened earlier, right? So
Yeah.
the first wave had happened in 2015 onwards, and we had seen some of the portfolio companies at Tano and multiples. We had seen how they benefited from that, but a huge wave of early stage consumer startups had started somewhere in 2019-20, and we thought because of several other reasons as well, the next decade or two is going to be great for these kind of companies or building the brands of tomorrow for India. And that's why we said, okay, let's try and do this.
Yeah, absolutely. I think, you've you've been investing in the consumer space for the longest time. The Indian consumption theme has now caught everyone's attention. Most family offices and investors I interact with are looking to actively invest in the consumer space now. But you've been investing in the consumer story before people acknowledge the potential of the sector. Can you zoom out and give us a macro view about some of the big shifts or inflection points that have shaped the sector?
Yeah, Shruti. So I think there are just too many changes which have happened, which makes it so interesting. Just today, why it's such a great time to be investing in consumer. And I'll start from the basics, just on the supply side, or in terms of ability of the brands to be able to supply or just be available for consumers. It's a very basic. The e-commerce has changed that dramatically.
Yeah.
Having been investors for such a long time, it was so difficult to just be available for your consumer pan India. That building of brands used to be something that used to take some decades, sometimes generations, to be able to do that. And that's why you would see, other than the large companies which had phenomenal distribution strength, they were mostly brands which were regional in nature, either a state or a couple of states, and they would take a long time to be able to build a pan India distribution. And this was such a big disruption, right? With a click
Yeah.
of button, you could become available anywhere. So that, I think, is one big game that changed in 2000, in mid 2015, or around. Then on the demand side, uh, I think the Indian middle class, so as to say, had existed in strategy books when I was studying. I don't think it was real. I remember reading there was some McKinsey report in around 2000 saying there are 300 million middle class in India. I think it was not even 10% of that back then, right? Today,
Yeah.
there is a large number of Indian consumers who are willing to pay for the product which give them value. Okay, and that's a huge change, and that number is large enough. People put that number at different kind of. It could be anywhere between, let's say, 12 to 15 crores, 18 crores, which is the India consuming class, which is what most of the young Indian founders building consumer business are kind of building for. So while one says, "Oh, that's only 10% or less than 10% of India," but that's a very large number. That's larger than
Yeah.
the population of several countries in Europe, and this population is fairly wealthy. I think we don't realize. We look at India's GDP in per capita is 2,700 GDP per capita, and it's still a long way to go for us to become even middle income. But I would say the India's top 10% is has income which is middle income country comparable to any middle income country, and maybe top uh, 0.5% to 1% is actually comparable to rich countries. And you can build each
Yeah.
of these opportunities, you can build into large depending upon what you are able to offer to them. uh, Over and above this, there are a lot of other changes, like last 20 years or so, most of the consumer categories were just about penetration, because I grew up in a country which was bad branched out. I don't know. You're far younger than me. Maybe you had more choices of brands,
Yeah.
but I had seen most categories see a couple of brands as choices. And for us, aspirational brands were only foreign brands, right? You would go out and you would bring back brands for everything, everyday use. That's what aspirational brands were, and that's changing. That's changing in a very big way. Both you have brands which are uh, giving you value, talking to you as a consumer, as well as building aspirational brands. And as a nation,
Yeah.
also, we are becoming more confident about ourselves. And hence, there is this rise of localism which happens. And all economies see that at some point of time, where you're more proud about your own things that are manufactured in your own background or owned by you. And I see that rise happen in India, and this is a rise which continues to kind of take these companies along. Today we are as proud to use Indian brands. Possibly most of us are proud to use Indian brands more than international brands. International brands don't just stand for luxury because they are international, right? uh, there is there is so much more, like there is premiumization which is now playing out everywhere because of these reasons. But consumer opportunity today, and what happens is, overall as a country, when it goes beyond this 2000 per capita GDP, the the incremental earnings go far more towards discretionary spends. Like today, of our entire consumption, uh, less than 30% is discretionary spends, which means 70% of the overall consumption basket of India is spent on basics, right?
Yeah.
As we go take this towards 5,000 and 10,000, incrementally the discretionary spends should go much higher than 50%. And that's where the opportunity is. Uh, 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 Today also, the category penetration in some of the categories is so low in India. It's unbelievable.
Yeah.
Fridges, ACs, we see that in India One. We all, I think, have read about India One, and the India One has all of these things, and hence we are not able to see where the opportunity is. So whether you want to play at the premium end and provide better products, aspirational products to India One, or be able to play the penetration for India Two, and maybe a little the upper end of India Three as well, there is a huge opportunity. Next 20 years is going to be a great place. India is the opportunity. I'm a big bull on India, more so on the consumer opportunity, but overall on the India opportunity for the next few decades.
Wow, thanks for plugging in the podcast name also here. But I think I resonate with what you said on so many different levels. I think the India brand play is so new for the country. Like I don't recall about more than a decade ago we had too many Indian consumer brands as such. But now in the last 5 years, I would say there's been an increase in terms of supply from a founder perspective also, where more and more interesting businesses are being built. And I think your point to the channel optimization, which has happened earlier, the only way to grow in India was offline, right? And
Right.
now you can get to a certain scale by just doing online and your website and marketplaces before you start going offline, because that does require significant capital investment. So I think the game, in terms of how the consumer playbooks operate now, is very, very different from what was happening maybe 10 years ago. But going back into your journey, because you bagged Safari when it was literally at 200 crores in terms of market cap, saw it till it got to 10,000 crores. So your experience of seeing that must have been a phenomenal learning experience for you as an investor. Of course, in hindsight, it all looks rosy, but I'm sure when you invested, it wasn't the business that it is today. Can you talk about that journey? How was it instrumental in shaping your investment philosophy?
Actually, I think there are some things which really shape your career, and I think my entire investing experience and journey with Safari is one such thing. Uh, I think you get lucky in a lot of these things. We were doing a lot of work in Tano on the on the travel opportunity and what are the best ways to play it. There are different ways to kind of play travel as a category, but a lot of them are not easy to play. Whether it is, let's say, intuitively, the hotels, airlines are not necessarily areas where investors have made a lot of money. And then we met actually another company and did a lot of work on that, and we're convinced about the travel goods as a category, but we lost it to another fund who was willing to pay more than 2x the price. So yeah, we started looking for someone else, and we met Sudhir on Rebound, and we just loved him. I think what we saw and what had happened, to give you a background, Safari is a very old brand. It's a 50-year-old brand. Sudhir acquired this in 2012. Before this, he used to be the professional CEO of VIP. He had already spent 25 years in the luggage space and had created the largest company in India in a way as a professional, and had created a lot of shareholder value doing that. And then he got out from there, and then he got an opportunity to acquire this brand, which had been a laggard, had been languishing, not growing at all. Uh, I was at 60 odd crores in top line for the longest period, and within a year of acquiring this, he had brought that business to 150 crores. So we were just amazed as someone who could come in and use his years of experience to kind of change a business which was just stagnant at 60 crore for a decade, take that to 150 crores, and was and showed the promise and this of taking. I think he also didn't think that this is the outcome that would happen. He would always say, in all his humility, that maybe we'll reach 500 crores if we're lucky. And but what we invested in at that point of time was also the founder. There was very little else to see, uh, because he had acquired the brand. There was nothing that was done on the brand. There was a huge brand saliency because it had existed for a long period of time, but other than that, there was hardly anything in the organization. People, it was run by the founders, the erstwhile founders, and there was no tier one, tier two in the organization. Distribution channels were not well oiled. Products looked from another era were not relevant at all, even for then. So all of that got rebuilt, and I got a ringside view, as close a view as possible, to how to build a consumer business in India. And I lapped up on that. Started spending 40-50% of my time uh, in Safari. It obviously came at the expense of some of the other things that I should have been doing, but I just loved it. And it it allowed me the opportunity to kind of see all different things, and so many things we did together. So as an investor, you are just kind of going alongside the founder, but you're learning every day. So we went and actually set up our sourcing office in China together. We had we e-com sales for him, it was also 2014, but it was zero. And Sudhir, in one of his famous quotes, told me that it's a fad. And I don't fault for a founder in 2014 to think like that, right? And the entire business being offline. but he's the same founder. Once I introduced him to 3 4 people and he saw what it could become, he had a outsized market share in e-com, and he continues to have that. So overall, while they have grown from 3 4% market share to about 25% in e-commerce, they have a higher market share. So that's what somebody that's what a founder needs to be. Okay, once you're shown an opportunity, once you're shown a door, you take it fully, and you the execution is what defines. And what I learned was, in India the opportunity is so high across all categories. It's just about your discipline of executing it, how you go about doing that. I don't think it was a easy journey for Safari. He was competing against, or the company was competing against, India's best, or India's largest and world's largest. There were only two companies in India, right? And you were a minnow with nothing, right?
Yeah.
Some of the things which really made a difference was agility and responding to opportunities very very fast. And it happened across everything. You recognize a product opportunity, you move fast. Sourcing opportunity, you move fast. Distribution channels, you open and you really hammer them down. uh, you take people calls, organization. So first 2 years, almost every Saturday we used to have this hiring Saturdays. So they would come to our office and we would meet 4 5 people every Saturday. And it was just building the organization, being a part of that. So much I learned there. We did a lot of similar things with a lot of other companies at Tano, but I think this was the most holistic experience that, as an investor, I could have asked for. And I think it has made me a better investor, hopefully better than what I was earlier.
Yeah, I think, it's not every day where you come across these investment opportunities where, they will become career defining opportunities. But I think in Safari, that was the case for you. But let's talk a little bit about the scale that some of these brands have been able to crack, right? Because earlier, I think this was in our first discussion also, where I was asking you that, very few, I would say sub 100 companies, about, I think it was 60 or so, had crossed the 1,000 crore revenue mark in the listed space, and only about, say, 100 or 500 companies were around the 500 crore and above mark. So, brands to scale from, say, 500 crores to 1,000 crores, there have been very few opportunities or companies which have been able to do that so far. But now, what we're seeing in the D2C boom, or the consumer brand space at large, is that many companies are able to do that. I think there are 4 companies in the consumer electronics space alone which have been able
Right.
to do that, and there are so many others which are showing very positive signs towards that. So, what is your thought on, what is causing this shift to happen in terms of scale and revenue opportunity, and they're able to do that profitably as well, right? So what are some of the key things that you've noticed, how these companies are able to get to this large scale so quickly in a compressed timeline?
Shrishti, I think it goes back to what I was saying earlier as to what are the changes that have happened in the consumer market. Like, it used to take time because distribution wasn't easy, and it was difficult to scale beyond a particular level because the Indian consumer markets were not deep. There were only a very small percentage of people who were willing to pay and had the capacity to pay. When both of these change, and it does not happen on one fine day, it is a gradual change, but I think we've hit the J curve where the change is now at a furious pace, where that markets are getting really deep. Ability to create in most of the categories is very high. Uh, Skincare as a category, and we have seen so many successes in that. When you think about our shelves, what they used to be 10 years back, when you forget about 20 or 30 years back, there used to be a limited number of products uh, which would be there. And today, that number is multiplied by 10x. And it's not just women, it's women, men, children, all, and specialized product for each. And that's something that happens when markets start to kind of evolve, when people have the willingness and ability to pay. And skincare, I think, is one of those categories which happens first in most of the markets, because it's just something that people are conscious about what they look like and what they want to look better and want to invest in that. But it's going to happen across multiple categories. It's going to happen, and that's the change that has happened. Your ability to do it fast is because today the opportunity is large, as well as you can switch on a button and can reach everywhere fast. It's about how well you have defined. It's about understanding. So the the how large you can make a business is driven by how deep is your consumer insight, right? Now, while at one level market has become large, it is also cluttered, right? And this is something I think we were discussing when we met last time as well, that there's just too many people right out there. We feel that there are so many founders building. Where is the differentiation and how do you do that? So so you meet founders who are spending the time with consumers, trying to understand what is it that they're trying to solve for. It The model of just outsourcing everything, going to a vendor and getting a product, getting it packaged by somebody and just listing is over. There
Yeah.
was a time where you could build skills just doing that, because of the fact that products were not available very well, and the legacy brands also didn't understand how to do e-commerce that well 5 7 years back. Today the gap is very narrow, right? They understand the basics very well. Today you need to spend the time on understanding the consumer, getting that insight as to what you're solving for, and clearly spending one other area is just understanding what your brand stands for. A lot of people understand their right to play, but not as much about their right to win. Right to win has to be very clear, and while you might work on it, it might not be clearly developed at a very early stage where we come in. But understanding of that this is my right to win, and I will continue to build on this as it goes, as I scale and I have more money to kind of invest behind that, is extremely important. But the opportunity, just people who understand that right to win have the opportunity to create large businesses in India. Just the market has, and it will continue to be. So the number of 500 crore brands, in my view, there'll be so many 500 crore brands. There'll be so many unicorns which will come out of consumer sector in the next 2 decades. You just have to execute right. You just have to focus, choose your category right. There has to be a reason for you. Being a founder is a tough job. I have a lot of respect for founders. Starting up on your own and going through that journey is extremely difficult journey. But if you're on that journey and if you execute well, I think this is the best time to build consumer businesses in India.
Absolutely. I agree with that. And, I think this is a good segue into talking about some of Prath's recent investment as well. You've disclosed three fund investments publicly: Jimmy's Cocktails, Aukera, and Assembly. They've built incredible brand recall and a space for themselves in the consumer space in a very short period of time. Are there any insights you can share about what your decision making process was like for these investments? And is there a framework you follow at Prath to be able to identify which businesses you want to invest in? This can help inform founders who are reaching out to Prath to understand the fund's investment philosophy better. And if you want to talk about, some interesting themes that stand out to you in terms of opportunities where you're looking for founders to back, you can talk about that as well.
Sure. Thanks, Shrishti. So I think uh, having been an investor for a long period of time, there is a fairly structured way in which we approach what investments we want to make, how we analyze anything that comes in. It's uh, it, three broad segments that we work in to kind of arrive at what if you would want to invest or spend more time in a company. There is the market or the category, there is founder or the founding team, and there is what the company is doing, or what I was talking about, the right to play and right to win in that category. So
Yeah.
all of these three are areas that we kind of work on a lot. Uh, we have a decently large team of 5 people for a early stage fund, which allows us the ability to do a lot of sector work. And I have to give credit to Harman here, my partner. He's somebody who is very very detail oriented, rigor, very hardcore rigor in trying to understand each of these categories from their own. And we don't think as deeply about each category. We try to kind of put them into broad buckets, but each category, the way it behaves, how consumers think about products and brands in those categories is very different. So we spend a lot of time talking to consumers. We have a consumer panel of about 50 odd. It's mostly women. We feel that women are drivers of a lot of consumption in India, and also I think talking to them gives us a lot more insights. Men don't necessarily think about categories or brands as deeply. maybe I'm being a bit prejudiced here, but
No, but that's true. I think most of the budget, which goes towards a family's needs in terms
yeah.
of where it's being spent, is the decision makers are actually women, right? So
Right.
that's true.
So then we speak with them to try and understand where the really large opportunities, pocket of opportunities are, and then I think we have actually created a founder evaluation framework. Also, it's very detailed. It's very elaborate. But the idea is not to kind of open that and put every founder in that, but use that as a basis for thinking about when you're thinking about a founder. When you say somebody is good or great, or somebody, or you say no, I didn't like the founder. Now that's something that you hear very often, right? As investors, you
Yeah.
say, oh, he's a great founder, or I didn't like the founder. What does that really mean? Because it so much of our own biases come into this, right? So rather than those biases, if there are a certain set of parameters that you say, okay, you think when you are saying this, can you think about these 5, 10 different things and then say what it is? So it becomes a vocabulary internally for us as a team as well. And uh, in addition to just evaluating them, I think there is this I think there is a founder market fit relevance to most categories, and it's underappreciated, both by the founders as well as I think by investors. We think it's as important as what people say product market fit is, and all our companies that we've invested in, I think, is great founder market fit. And I would maybe just a few lines about each of them. Jimmy's Cocktail is building a premium beverage play in India. Uh, both Ankur and Nitin have spent a lot of their time around consumer businesses, mostly around beverage businesses. They understand how to build beverage business in India. Both of them come with 20 years of experience, one on the marketing side, the other on the distribution side. The skill set which they bring to the table, I think, is almost unparalleled in terms of the what you need to build a large, successful beverage play in India. They started with a small market. They actually created the market in a way of mixers in India. Today, they're the largest brand in that space by far. But there is also the understanding of this business today is not very large. It could become large 10 years down the line, 5 years down the line, but you can't take a bet that whether when that will happen, when the J curve will come. Otherwise, there is a small percentage
Yeah.
of Indian population which understands cocktail and is wanting to have cocktails at home. And for them, you've already built a very nice recognizable brand. There is a huge brand recall. I think people, when they think about
Yeah.
party at home and thinking about having cocktail at home, this is the first brand that comes to their mind. And but how do you grow this then from there on? They've added a lot of other categories under the Jimmy's brand to kind of grow that, because mixers as a category is much larger than just cocktails. So that will continue to provide
Yeah.
growth over there. But at the same time, when you look at beverages, the most exciting category is the energy drink category. And Nitin
Yeah.
had spent 10 years at Red Bull doing distribution there, and they always knew that they wanted to enter. They've entered that category, and I think it's a great category to build in India. It is the younger generation's chai or coffee, their preferred mode of intake of caffeine. What chai meant to our generation is what energy drinks means to them, and it's a very nice way of looking at it, because it's a functional drink at the end of the day. While it can be had at any point of time as uh, uh, but the functionality of it is what makes it really unique, and that category globally as well as in India will become very large, and I think they are very well placed to kind of develop that. So that's Jimmy's Cocktails. Okra, both Kumar and Lisa have been again come with 20 years plus experience themselves. Kumar used to be the CBO of Manure and has been around retail space for a very long period of time. Has very large businesses, retail footprints he has been leading, and has great understanding of how to scale offline first businesses. Right, Lisa is someone who has been a marketer all her life and understands brands and marketing very well, and very early on in her career was also kind of leading platinum guild in India, so has exposure to jewelry as a category. And I think we just love lab grown diamond as a play. Intuitively, there is no reason why this will not become very large and follow the US model, US as US is a very large share of LGD of the overall diamond. India is still at a very nascent stage for a variety of reasons. And uh,
Yeah.
when we think about the attractiveness of LGD to India, we thought that India should actually be larger. Your the value conscious market that India is, once the consumer understands that it is the same diamond, it's virtually a test tube baby that you're talking about. There is no other difference between a LGD and a mine diamond, and you're getting it at one fifth the price. The transition will happen at a few days space. And again, we think it's the best team because it's offline first business. They're building at a very high ASP of 85,000 to a lakh, which at overall jewelry in India still is mostly offline at that price point. It's
Yeah.
predominantly offline, and they can execute it far better than a lot of others can. Similarly, assembly is building a travel goods in the travel goods category. I've had such great success in the category. And have seen it so close up. I think I definitely wanted to do more in the category, and it's just the category becomes something that you're really fond of. You think success, and I will learn whether the success is something that happens just because of the founder, or I learn something. I'm able to pass on some of that learnings to and share that with the founders. But here again, both the founders, Aditya and Mohit, come from years of having been in business. Mohit actually is from a family which is one of the larger manufacturers of luggage for various brands in India. So he has a deep understanding of sourcing and product. And I think for this category, I've seen it makes a huge difference. Sourcing and product.
Yeah.
A lot of the people don't come with that basic understanding. They might come with consumer or a brand understanding, but here, product understanding is very critical. And Adi has run his own social media digital agency in the past, and also was he had a business which was into bags earlier. So both of them have been around the space, have built this business very frugally. They did not have much capital, they had not raised, and they understood what it needed to kind of really scale. And then when we looked at the space and we saw we wanted to play the premiumization theme over here. We thought that they understood the price points very well. It also comes from having been around that space very well. And this is true for most categories. India premiumization is at 20 to 50% to, let's say, the mass brands or the legacy brands. 100% to 100% premium in India, trying to build that luxury is a very small market. And I
Yeah.
think their understanding of that and wanting to build at that price point, and the ethos that they brought on both brand as well as product, I think just we thought so. That's been our thesis on all of these. We feel that we have selected best founders in each of these categories, and that's what we focus on a lot. Finding categories that we want to work on, we believe are great opportunities, and then going and looking for great founders within that. uh, uh, in terms of newer categories, I think we are excited about most categories. Some categories are more difficult to build than others. Some categories differentiation is far lesser than others. But I think all categories, in terms of the macro opportunity, is there. Uh, so we would ideally want to see founders really try to understand or be able to answer this question first for themselves. What are they building? Who are they building for? And if consumers are buying their product, why are they buying it? I think just being able to answer that question is so important. And I feel
Yeah.
a lot of people struggle with that, and that's what you have to scale, right? Once you understand what is it that people are buying you for, then it's just kind of putting your effort and trying to doubling down on that and really scaling that. But if you don't understand that, then it takes a long time to figure out. You will do everything. India is such a large market that you will continue to grow, but uh,
Yeah.
are you creating value? Are you really, if you increase your number of SKUs, anyways, it happens. An online world allows you to do that. But India is still predominantly offline market, will not dramatically change while online will continue to take a disproportionate share. We'll continue to be offline, larger offline market, which is not a world where you can have hundreds of SKUs and grow through that. So
Yeah.
you finding out what really works, finding out and having either that uniqueness on the product side, doing that innovation. And consumer innovation is not something which is like which requires you like 20 years of research in a lab and to do that. It
Yeah.
it's minor innovation, but something that is appreciated by the consumer. It solves something for the consumer, and it's happened, and that's how large brands have got created by through that. So just if you're able to demonstrate that, we are here. We love kind of partnering with founders who think consumer first, brand first, because I think a lot of other things are far more easier to do.
Yeah, I think thanks for sharing that because, I find these insights so refreshing because not many funds we've spoken to have consumer panels, right? Who are actively trying to map out different sectors in terms of where the opportunities lie. I know I'm pressing you for it, but, it would be great if you can talk about some interesting themes in terms of sectors also that you've identified, which look very interesting to you in terms of a lot of white space and opportunity to build in this space. This
Right.
can help with founders who are reaching out to you, or even thinking about starting up. It will help these founders immensely.
Sure. So today we are very excited about health and wellness as a category. We think we are at a very nascent stage in that category. All of us care more about our health than what we used to, are willing to invest more. So that opportunity across the spectrum, whether you are building uh, for a young Indian who is a young working Indian doesn't have as much time, and hence he's trying to solve through fixes like, let's say, any kind of nutritional supplements, or you're building for someone who is more conscious about his fitness and solving for him, or you're building for the older age, or you're building for kids. I think overall health and wellness, I think, is a great kind of a sector to build in today, and we are looking for people who are building great businesses there. We think spending more time at home is a permanent change now. We what we used to do pre-COVID versus post-COVID is a permanent change. We are eating at home, we are watching all content at home, we are spending so much more time at home, and hence anything which improves your life at home is also, I think, and there are so many categories which play on that, whether it is home care products, kitchen products, it is home improvement furnishings, a lot of those. And a lot of these categories have not seen consolidation or brands like emerge which are there. Some of these are still largely unorganized. So if you see furniture furnishing categories, is still very unorganized market.
Yeah.
Home improvement as a category in India is still very unorganized. So plays people can play that and kind of build brands in that. I believe very very large opportunities, each of them. Then let's say anything which is focused on Gen Z, and I'm kind of making a generalization. A lot of sectors play on that, but I think understanding of the fact that Gen Z is different from us in so many different ways. It is not just a generation which is shifted from millennials to Gen Z. There is difference because I think the Indian, uh, the the cultural change which has happened for Gen Z is far greater than possibly doesn't happen in 10 generations. Right? We were for always we were India was a joint family, family first. We would kind of do decisions being taken by the elders in the family, and uh, actually for a long extent, not just we were not rich, consumption was seen as a vice. Okay, saving was seen
Yeah.
as a virtue, right? I don't know if it appeal if it means something to you. I have seen that, like, people saying that,
No,
okay,
no, definitely. I think, even I grew up with parents who barely wanted to spend on anything,
right,
on themselves. Definitely not. It was
absolutely,
always prioritizing education, family
yes,
needs, all of that. It was never about, oh, I want to go shop at a particular brand because, I can
right.
afford it.
Right. So this generation is different because they don't see consumption as a vice. They see consumption as a way of living. They For them, they've actually not seen a lot. They're not able to relate to the stories of what I have heard about my grandfather, like traveling or walking distances of 5-10 kilometers to go to school.
Yeah.
That means nothing to them. So they are able to spend money far more easily. It's the impact of not just income, which is obviously great. Income and wealth has reached a disproportionate size as compared to even 90s or 2000, but just culturally they're far more easily able to spend. Today's millennial, even if he's earning whatever, a couple of crores, his spending patterns will be very different than a Gen Z who is earning 10 lakh rupees.
Yeah.
So people who are, and then you top layer on that, that these younger kids do not necessarily relate to the brands of their parents, which is also unique. Like, I grew up using the
Yeah.
same brands that my dad did, such if it was available, and it has continued for generations. Those brands meant something. We heard about brands that have been used by generations, and today that disconnect is happening. Today's younger kids want to use a brand which is for them, and
Yeah.
hence that opportunity is even larger and magnified, because who has capability to spend money, willingness to spend money, who's out there and wanting to spend on himself. Like you pointed out, that your parents would not, there was always kids first as an approach, right? But when
Yeah.
you came to spending your money, it was never about how much you had in the bank. It was, consumption was not really a priority. Today consumption
Yeah.
is core, is something that everyone wants to do. Everyone likes to spend money on themselves, and that's what the difference is. And somebody wanting to build a brand for them has to do a great job of talking to them. That brand has to mean something to them, and a lot
Yeah.
of legacy brands will struggle because their core audience lies somewhere else. So it's not that they can't do it, they might not want to do, to talking to the Gen Z, and that's where kind of a large part of market, and they will be a large, in another 5 7 years, they will be 30 40% of the consumption basket for India. So that's like
Yeah.
really large, right? So
Yeah.
building for them, anyone is doing, could go on. There's so many themes that we worked on. Mother and baby care, we worked on a lot, and we thought that there is a huge opportunity. Again, the change which is happening, till the previous generation, most of, because of joint families, you would, when women became pregnant and kids were born, there used to be a network of your family which was around you, and they would be giving you advice. They would be telling you what to do on a
Yeah.
minute by minute basis. Today, that one, that does not exist. Secondly, even if it exists in some form or manner, I think people don't want to go by what was done by the previous generation, not because they want to revolt. They just feel
Yeah.
that that is based on, not necessarily based on science, and there is so much science which is available today. They would rather believe their peers who have gone through that, in or their friends, or somebody who has gone through that in the recent past and is able to guide them. So that opportunity is humongous. And at that point of time, those 3 4 years, whether of pregnancy and early birth, there are not too many brands who've been able to just focus on that. While it's a limited time period of 3 4 years as an audience, I think the potential to build very large outcomes in that exists.
Yeah, I think two very interesting themes you spoke about. I think Gen Z, they are such a unique audience, and even to build for them is so unique because I think they want, they want brands whose values they resonate with. It's become a lot of like value resonation and also personalization. They want brands that directly speak to them in their own language and understand their patterns. And then thirdly, they want everything delivered to them as quickly as possible. I don't think they even have the patience to wait for 3 to 5 days
Yeah.
now, where because they've gotten so used to quick commerce, and getting deliveries within 2 to 5 minutes. So that kind of impatience and also individualistic behavior, which we never saw in Indian society before. I think that is definitely a generational shift. And to what you were saying about moms and babies, I have a 16-month-old toddler. I've been through all these buying decisions very recently. So as a consumer, I see the gaps in this space. Like most of the toys that we have in India are imported from China. The more
Yeah.
expensive brands, which are for strollers or like baby gear, they are also international brands, but then there is a huge premium on those, whereas the Indian competitors have very basic pricing. But there's a big white space, I would say, in the big mass premiumization space, where there aren't too many brands to buy from and consumers are willing to pay for it. It's just that the brands
Absolutely.
don't exist. So I think both phenomenal opportunities that you spoke about. But Piyush, coming back to your investing journey, I remember during one of our conversations, you mentioned bringing the private equity hat to venture investing. You spoke about how often most venture investors are okay with 9 out of 10 companies dying or not doing well, whereas at Prath, you wanted most of your investments to do well. That's not the typical power law that we often talk about in the venture capital business. Can you talk about what fueled this approach and why you think that it can work for early stage investing, given how high the mortality rate usually is for the business going from seed to Series A?
I think it comes from the fact that we are focused on consumer brands as businesses to invest in. Uh, Today, the opportunity in consumer brands is such that people building in that have the ability to take a certain market share. So, depending upon how deep your consumer insight is, how good a job you do of kind of actualizing that opportunity, you will take certain market share. It could be 0.1%, it could be 10%, but more often than not, it is not that you're trying to build a a new technology which is changing the shape of the world, and hence the chance of it becoming zero is lesser. Having said that, the value gets created because of not just the size that you become, but also how you kind of are able to make a difference. Are you able to build a brand which is growing organically and profitably, and also means something and valued by the consumer? So value creation will be very different across these companies that we invest in. But I just feel consumer investing is like that, where the chances of it becoming zero are far lesser, and it's far less understood by the entire VC ecosystem, because VC had not existed. VC started, whether it's globally or in India, for tech entrepreneurs building out technology companies which were changing the shape of the way we were living lives, the way we were kind of doing business, or kind of consuming things. But this is not just changing their behavior. This is just saying that, okay, you you were consuming or you were buying a beverage, now you buy another beverage which is better because this is what it has, and building that brand within that. And that's what the core belief is, that most of these companies will reach somewhere, and when we come in, we are not typically pre-revenue in companies. We come in where some bit of that product has got established, and there is we are able to see why people are buying a product acceptance certain level has happened. While what is defined as PMF is a little difficult to kind of think what that is in consumer space, and it is, people define it differently. But that might not have happened, because PMF to me is where if you are able to repeat business is one drives that, or you are able to ability to just do the first time business profitably, right? Either you are able to deliver to the first time consumer by making money from him, because he's actually looking for your product, or you're delivering value that he's able to reach there and you don't have to spend as much. Or if even if you have to burn money to acquire the consumer, then the repeat kind of justifies itself. The repeat is so high. One of these things have to happen for you to say that, okay, there is some bit of PMF in this business. But just kind of some bit of product acceptance tells us, okay, he is on this path of getting to PMF over a period of time, and will be able to deliver or grow this business plan to the expected scale. Growing businesses to 100 crores has become far easier in most categories, and
Yeah.
and we are seeing that happen across the board. So that's why I see that value creation will be different. If there will be 500 brands or 1,000 brands which will get across this number, not all of them are as valuable, but they don't become zero. You're not taking the technology risk, and you're not taking the very early stage risk of, let's say, product not really even meeting the basic acceptance level of the consumers. So that is one big difference, and how we approach it is also a bit different. We feel that we want to be partners to consume to these founders. We want to help them think about what really is important to focus on at this stage of the building of the business. A lot of the madness of the previous 3-4 years were growth at any cost. And while it's been said a lot, we have all read about it. We have seen it in so many companies. It was actually practiced. It was practiced to the extent where these companies were not behaving like they were building consumer brands. They wanted to
Yeah.
grow like a 10x every year. It does not happen. It's not, consumer businesses are not like that. Okay,
Yeah.
they can deliver phenomenal return over a period of time, but they will not grow 10x every year. For you to deliver something like that, then you will build something, you're trying to build something else completely. Just that understanding in a lot of lot of the investors not being there, and a lot of founders were taken down the wrong path. And today that realization has come in a lot of founders we meet. They want to, if they have a choice, go to a consumer fund, and there are several of them now, 4 5 of them, who are doing a
Yeah.
great job of kind of building consumer businesses. And I think they're natural partners to consumer businesses because they understand the trajectory, they have the patience. Brands don't get built in a day. We like brands traditionally have been built on one particular SKU or product category, and then over a period of time they kind of get into. Today, in 6 months of existence, we see 20 SKUs. We In 2 years we see multiple product categories. People wanting to go international, people wanting to do everything.
Yeah.
It's just not understanding that that's not. Are you really creating a business? It's very easy to get those numbers because performance marketing is a great engine, and that can obviously drive businesses, can take you to a certain scale. But that's not creating value. I think performance marketing alone does not create value. You need to do that because that's the basic of today of building a business, but you need to do far many more things. And just the realization of that within the founders and the investors kind of helps take companies down that path. And just the large opportunity and the fact that your right to win doesn't come from kind of changing a lot of big things. So consumer tech, we'll do some bit of consumer tech investing as well. That might still be 0-1 game, right? Where you,
Yeah.
if you're building a, let's say if you're building behind some marketplace, we feel that most of the marketplaces, even verticals, have got built, but there might be opportunities, and we have been working on where those opportunities lie. Those are more difficult as an outcome. You can have a very large outcome, and you're betting on that large outcome, and hence you're okay with that large risk of failure, which is what the VC model is. And it's great. It's worked for them. The power law works. It works beautifully because you are building for the large outcomes. And hence you're okay to have a very large number of failures also to do that. Uh, I don't think consumer brands are like that. You don't have very large outcomes just because of the opportunity. You will have great outcomes, but a large number of great outcomes. So we really believe that our portfolio construct in terms of how it will deliver returns will be far more closer to what a private equity portfolio looks like, where large number of companies contribute to that return rather than a few number of companies to do that.
Yeah, that was great actually. Because you highlighted the key differences between tech and consumer brands. But interestingly, what stood out to me was also the fact that, if you overcapitalize a business, specifically consumer brands, they cannot grow at the same pace as you expect tech companies to grow, right? So, this must have been very interesting in terms of discussion when you were having your LP conversations. So I would like to spend some time talking about your fundraising experience for the fund. There's not a lot of founders get to understand what goes on behind the scenes of trying to establish a new fund. What was your experience like, and any advice for GPs who might be going through the same process?
Actually, it's been very difficult. I think and it's an understatement. So it's been difficult. It, I think the the private equity fundraising kind of follows the investment climate, and unfortunately the best time to raise money is when the markets are doing very well, and might
Yeah.
not be the best time to invest. And I've been around and I've seen that always, right? 2020-21, it was very easy to raise money because people were seeing everyday news of unicorn, news of subsequent rounds were happening every alternate month in companies. People on paper were creating a lot of value, and hence there was exuberance, maybe irrational exuberance to a large extent, and hence it was very easy. And then come 22, when we started kind of talking about our fund, I started to wane. It started to wane, and then slowly started to disappear completely. There was complete
Yeah.
silence, and for the right reasons. I think people lost money. People lost money in their direct investments. People lost money in their fund investing. The basic principles of investing were forgotten, and I've seen that happen in all cycles. It's not the first time it has happened, and it's not the last time it has happened. It will happen again for sure. But when you are raising money in the period where people, you're just coming off that peak, people don't just want to talk about that asset class. People said no, early stage, and they switch off. Early stage fund, okay, that's it. You might be great guys,
Yeah.
and but this is not
There's
the right
also a
time for
shift
me.
to safety, right? Like,
Yes,
focus on liquidity, focus on maybe
correct,
public markets or even later
right,
stage funds where, there is some more assurance in terms of, returns. Whereas in the early stage game, I think we saw what has happened.
yes.
So, yeah, please talk about
Right.
that.
As you rightly said, the public markets and public markets have done wonderfully in the last 3 4 years post COVID.
Yeah.
People have made a lot of money in public markets, and hence for you to be able to say, okay, we are positioning a private fund with the liquidity and a long period of commitment, and which will deliver X return, that's just doesn't appeal to people in this context, and hence I think it was a real uh, sobering experience to do this last 1.5 years that we have been doing this. We thought that it would be far easier than this. Also, both Herman and I, we had not done HNI fundraising. Okay, uh, most of the money, Tano's entire money, and most of Multiple's money was international markets. We had taken from institutional investors, and there is a very basic difference between institutional investors when you raise from, for us as people whose job it is to invest in funds, versus any HNI or family office, because uh, the reason for that institutional investor to exist is to invest in funds. So they will meet you, they will evaluate you and benchmark you with your peers. They understand the relevance of the funds investment cycle, and they want to play all kind of asset classes and all vintages. We believe that
Yeah.
2023-24 is going to be a great vintage because it was difficult to raise money. It was sanity in what was getting built. Valuations had come off. Founders were building it in a much better way. But it is far more difficult to explain that to a non-institutional investor. Uh, Whereas institutional investor really understands that that's the kind of institutional memory that they've built, and they exist to give money anyways to funds like us, and our ability to appeal to them and make them understand is more. But it was at the same time also very interesting because I just feel that the HNI population is far smarter, right? Because they're usually you're pitching to businessmen who have created their own businesses. They will take a call on you like we are taking a call on market and founder. So they will, while why we were able to raise money was saying, okay, we are taking a call on you. You guys have done this, you guys know we like you, we like your approach, and hence we are willing to kind of give you money. Otherwise, giving a blind pool in an environment like this, in a at a stage where people have their investments have not done well, is a very difficult call. And we are thankful, we are grateful to all of those people who have backed us at an early stage, because that's what you're looking for as founders and as investors. You need early people to believe in you because they don't have anything to see. My past experience has been at a different firm, and people challenge that and say that, okay, how much of that is your contribution? And rightfully so. Like, I might say that I have been part of so many good successful deals. There is no way to know how much of that is because of the one is the brand that you were investing under and your colleagues' contribution towards that. Uh, and by the time our second fund happens, there'll be a portfolio to see, right? So it'll be easier for people to take a call, and hopefully we'll be in a better environment and a better market. People will want to do early stage investing hopefully by then. So it was really tough, but to me it was extremely educational. It was, we were doing this for the first time, meeting people, HNIs, and there was so much to learn. I think you learn selling, and I think I've read this across multiple books, that selling is the most important thing that a founder needs to know. Everything else can be hired for, but you need to know how to sell whatever business you are in. And I think I've learned a lot of selling in the last year and a half. Hopefully, that will continue to help me in future as well.
Thanks for sharing it so candidly. You were being very vulnerable by talking about these experiences because I also know that, a lot of LPs and family offices do not want to back first time fund managers, right? And
Yes.
while you and Harman both have extensive experience having done it, but Prath is on its first fund. So
Right.
hopefully things will change in your favor, once you have a portfolio
Yeah.
to show and, there will be more capital than you can imagine flowing your way. But I know it was a tough race for this one.
Thank you. Hmm.
Coming to your multi-stage investing experience again, you talk about some of the LP conversations you had. Can you talk about how different each stage is, and are there any interesting insights that might surprise most people? These days, there's a lot of talk about how late-stage capital is missing in India because of which we are seeing very active early stage, but not as much happening deal-wise in terms of Series B and beyond. What is your pulse on the fundraising environment? Where are we currently in the macro cycle in India?
Fundraising happens in cycles, and a lot of businesses follow these cycles, and I've seen it always follows cycles, sometimes related to macroeconomic activity, sometimes not necessarily just that, but just liquidity. International liquidity also drives a lot of this. What has changed dramatically over the last 2 decades is the relevance of the domestic liquidity. Uh, when we were raising in our our earlier funds, there was no relevance of the domestic market, but for a few institutions which existed. Uh, but today, uh, I think somebody, a fund of fund, told me that there are people who are trying to raise 2 lakh crores from domestic markets in India, and
Right.
there's just so much liquidity, and this is a reflection of the wealth that has got created, the risk appetite which is inherent in India, and people wanting to take risks and invest beyond, and just the movement towards overall equity investing as a culture, and somewhere the early stage investing is a part of overall that. So I think that's the change which has happened on the overall fundraising scenario, moving to India and kind of doing that. But given these cycles, it is always, and each stage might follow a different cycle, right? Public market investing, and yet the closer you are to larger companies or public market, have a very different cycle as compared to early stage. uh,
Yeah.
and hence you see gaps in markets at different points in time which emerge, because when it becomes easier to raise that kind of money, you raise that, and you see teams spinning off from existing funds and raising that. And when it becomes difficult, there is a gap which gets created, then more people kind of get attracted by that. Today, the gap that you were talking about, Series B and beyond, has come from various reasons. It is because of, one is the paucity of number of investments. So because I have done growth stage investing and later stage investing, in 2008 9, there were maybe 200 funds doing growth stage investing, $10 million check cutting in India. And this was not tech VC, this was growth stage private equity investing. I think if today I were to count, there will not more than 20. We are like 20 years later almost from there, and we have 1/10 the funds that are operating in the space. uh, so it and it
Why
just
do you think
because
that has happened?
so it's because of the way firms evolve, right? So aspirationally, people who do well want to raise larger funds, and they have gone on to raise much larger funds. People who are managing $100 million are now managing 500 million or $1 billion fund, because unfortunately the size of the check or the size of the fund determines the income, and hence that has a huge impact, and that aspirationally people are wanting to become
Yeah.
larger and larger. And I think there was a lot of uh, low quality investing that was being done in India in 2006 to 10, because of the exuberance. I think if you think today there is exuberance in India, 2006 was madness. We, at that point of time, exuberance around what India could become was phenomenal. The India becoming the next China, we having it maybe 10% double digit growth rates. The number of reports that you would read, next 20 years we'll grow at 10% plus. And hence a lot of foreign capital was entering India, was looking for fund managers, and most of the fund managers at that point of time were first time fund managers, not just first time funds but first time fund managers. So a lot of basic mistakes got made in during that era. So they had I think a lot of them had no right to raise the first fund itself, and a lot of them just never raised the second fund. And people who did well became larger. There were only a few people who said, "Okay, this is what we understand very well," and continue to do. And I think that's what kind of people should ideally be doing. Find a stage, because each stage is a little different from each other, not very. Your competitive set changes in terms of who you're competing with, and maybe a little bit of dynamics on how to source deals and how to kind of engage with founders, and that might change how do you add value. But typically, if you've invested in a particular stage and a sector, kind of focusing on that, which is what we are wanting to do at Prath. I don't think we'll vacate the space that we are in by much. We might want to do a slightly larger fund, be able to do slightly more larger deals, but we want to be operating in this seed to Series A stage for the longest period. We believe this opportunity exists for a very long period of time, and we will we'll be able to do a good job of it if we continue to operate in the space that we are in for the longest period.
Yeah, I think, thanks for highlighting the shift which has happened in domestic capital also available in India. I remember a time where, because we've been investing in the public markets for a while. So FII flows were tracked on a daily basis because that would dictate how much capital was, coming into the market. And that's where, the stocks would move. But now, even if there are major outflows that happen, there is enough domestic capital in India to support the momentum in the stocks, and those companies don't fall as much as they did before,
Yeah.
if there were
No, I
outflows. I
think
think
all
we
of us are
last
yeah, all
yeah
of us are aware about the SIPs. There's 17 or 17,000 crore or
yeah
18,000 crore of SIPs coming into public markets every month. It's just
yeah
unimaginable, that kind of capital, domestic capital. So yeah, that sustains. I agree with you fully.
yeah, amazing. So talking about how you want to build out Prath, you touched upon it a little bit, but what's your personal ambition for Prath? How do you see it evolving?
So see, I think when you start a fund and what you want to kind of do, if it is not thought about right at the beginning, I think what I was talking about, that aspirational just wanting to become larger, is one of the aspirations that most of the people start out with when they're starting a fund. Okay, but one day should come when we become $1 billion fund, and I think we discussed this a lot when we're setting this up, and uh, both Herman and I would spend days discussing as to what is it that we are trying to build over here. We are doing this together. It helps that you are in a stage of life where you're able to take these conscious calls. 10 years earlier, I don't know whether I would have been able to think about it like this, but today where we are, uh, uh, we were very clear we wanted to build a firm which will become a partner of choice for early stage consumer founders. And that is a vision statement. That will not change now. So that's what we want to become. There is no, and we want to take our time getting there. There is no rush. We have been around for long enough, and having setting yourself targets of doing a second fund in the third year, or doing a third fund in the sixth year, those are the things that set you for failure, right? The
Yeah,
base of investment making is not determined by you. Base of investment making is determined by the by how lucky you get in finding the right people, right? We have locked in over 1,000 deals in less than 15, 16 months, but we have done, like, we've closed three. There are two more which are likely to close in near future, but we have not at any point of time said that, okay, now we want to do a deal in the next 1 month, or the next 2 months we have to do two deals, because that sets, we will be forced to make suboptimal choices, and that's how you will want to build it long term as well. Have values which are defined rather than a size that you want to, what you want to achieve. If we are able to create a few companies which become, continue to grow during our association, build great brands, and after we exit, someone else comes in and makes money, and you see that flourish and become a part of uh, a lot of people's everyday lives, that's what will give us joy. And being part of consumer brand journeys is what we want to be, rather than kind of say that, okay, we want to be this large or that large, and hopefully be a partner. We emphasize a lot on this, and we tell this to people that we meet, that don't think about us as investors, think about us as partners, because there is such a long period of time that you will be uh, coexisting with us. You should be able to pick up the phone and speak to us about everything, and not look at your scene, oh, this guy's called me again as to, oh, now what do I tell him? uh, Sharing bad news first. And I think these are cultures that we want to build in our portfolio companies. These are some things that we have learned, that businesses don't run on an Excel sheet. In fact, we don't know of any business which fails on an Excel sheet, right? In real life, it's very different. Right? We
yeah,
know that everyday challenges are so different. You speak to, and this is true for companies which are 1,000 crores, 2,000 crores in size as well. So to say that a 20 crore top line company will not have challenges on a daily basis, which can't be planned for, and you have to solve for when it happens to you, is a bit foolish, right? And all kinds of things will go wrong that you can think of and you can't think of. But uh, just having this culture of, okay, it's we have this and now let's solve it. So bring us on board to your problems and we will help find those solutions is our generic approach. uh, and I think it helps a lot. It builds credibility, and that's how we have in our fund. We have six of the founders that we invested in the past invest in us. I think that says a lot, and it gives me a lot of pride and joy that that has happened, because in our world we have only seen people fighting with their investors, right? You hear about so many stories about,
Yeah.
or even if they're not fighting, they're not really fond of each other as people. Here they're wanting, wishing you well and backing you when you're starting out. I think that's something that we would want to continue to build. We want our founders to do well so that they can continue to back us. So hopefully our first fund founders will invest in our second fund, and that's what should happen. That's the ecosystem that we want to develop.
That's such a great way to build an investment firm, very honestly. You've mentioned luck a few times in the conversation. As investors, very often what I see, on LinkedIn and other platforms, as soon as a fundraising announcement happens, there'll be investors rushing to take credit for, how they spotted the opportunity in the earliest days. And we've seen a lot of that. But Piyush, in your experience, what do you think is the role of luck in our business?
It's an interesting question because I've had very different views about this, and I continue to have differing views depending upon the situation, right? Depending upon what you're talking about. So, as a investment firm, we believe you need to have very, very rigorous processes. Those processes and systems, your whether it is of evaluation, whether it is of the way you go about conducting yourself, all of these determine what you will not do, and failures to avoid comes from your processes. Successes don't come from your processes. Successes come because of the market opportunity and you finding, and I think the luck is in finding the magic founder, right? You do whatever you want to do, and those same opportunities, you put two people in that, and magic happens by the founder market kind of meeting, that perfect kind of environment gets created where it happens. Investors need to focus on how to avoid the mistakes, and that's something that we really want to focus on. That's what I've learned. I've been a follower of value investors. Charlie Munger is somebody that I would swear by. I've read a lot about him and his writings, and you realize that you can't, if going in I knew that something was 100x, it's foolish to kind of think that investors knew going in it was 100x. You obviously do your work to realize something is good, but where you get your big successes are not because you saw that as big successes. You invested in good companies, taking care of what not to do, and then during your life as an investor, you have long life as investors, you will find those companies which will outperform and will go beyond what you thought could happen, and hence will deliver the outsized returns. So the luck is in on the outsized success. I'm not for once kind of saying that you need to build something which is predominantly predicated on luck kind of playing out. So that's the distinction which is there. As an investment professional, as a uh, personally, I actually don't believe in luck. I think you get what you work on, and
Yeah.
hence when I say you get lucky, it's a very specific instance where I'm bringing in that luck. That as an investor, you do not know the 100x's when you're getting in, and that's where you need to get lucky. But to leave it on luck is not. I would want. I work hard. Actually, I strive for improvement in everything that I do. There's a lot of this thing of process orientation. Every single thing that we practice, whether as a firm or what we want our founders to do, there is a lot of rigor and process orientation in that. So, but luck plays its part there. You follow the
Yeah.
process and try to get lucky, and if you get lucky, then there's nothing better than that, right?
Yeah, and I think the processes and systems actually prevent you from losing money, right? And I think that's what Charlie Munger, Warren Buffett, everyone talks about. Just don't lose money. I think that's you'll do better than most investors, I would say still. But yeah, the larger outcomes, I don't think anyone has any control over that. No matter how much we might want to believe that it happened because of us. Coming to my last question, Jeff Bezos has this regret minimization framework where he talks about taking a lot of life decisions by picturing himself at the age of 80, and he thinks back to the current situation. So think about of yourself at the age of 80. What profound insights do you think you would have at that point? Specifically, distill it into one significant learning, one regret, and one pivotal life decision.
That's a difficult one, Shrishti. Okay, so I truly believe that our lives outcomes are not dependent upon what happens to us, but how we react to that. So a lot of people have written about it. There are a lot of interesting theories, both spiritual, religious, as well as science based, that controllable and uncontrollable variables, you need to kind of focus on what you can control, and just bringing your energies uh, to just how you react to situations, because all of us will see good days and bad days. How we behave in those good and bad days kind of make what our life is overall. And just that realization, and I think repeatedly I would have told this to a lot of people, that I've had a great life. I've been, again, we'll use the word lucky. I've been lucky. I've been, God has been kind. But there will be that phase where I'll possibly not feel that lucky. But I want to be the same at that point of time. I want to feel, be able to respond in that same manner to things around me, and say that, okay, this is what life is. It is not. It can't be a one way street of just good days. Uh, that's something that I have learned from people around me as well. I've learned it from books. I think it's very important for us to have a good life, to be able to appreciate that all of us will have a life which is complete, which will have its ups and downs and sorrows and happiness and a lot of that. You need to deal with it, accept it the way it comes. So that's the learning. Regrets, I don't believe in much. I generally don't dwell too much in the past, and uh, it's obviously all of us make mistakes. A lot of us, and I'm talking this personally, a lot of us might not. If you go back, smaller decisions, you will change what you have made previously or this, but large decisions, I don't think I will change any. I want to live with my mistakes. I and if you want to rectify it. Otherwise, live with it and accept it and move on. There will be many more things
Yeah.
that you have to do in life. So I don't don't believe in having large regrets. What is the last one?
And one pivotal life decision.
I it's a I don't think there is one thing that kind of defines you. It is uh, early on decisions were made by someone else for you. So early decisions, a lot of them are life complete shaping, but I don't think I took any of those decisions. Someone around me was taking that for me. But professionally, I think I I'm very glad that I took the decision of starting Prath, and I would like to. So while it's still early years, I think this is the life shaping decision for me professionally, where I have started something out. I'm clear about what I want to build over here, and hopefully I'll be able to build something of value, and that's very important to me. So hopefully this will be the life shaping one for me.
Amazing. I think, the more you feel aligned to your values, and I think in Prath's case, it is aligned to your life's mission. So I have so much respect for your journey and, what lies for your future also. And Prath, it's been fantastic just seeing you go through this fundraise. But now that I know of your investments and now the world knows about them also, it's very exciting to see how this consumer fund will now evolve. Coming to the last segment, it's a rapid fire segment. Try to keep your answers short. Say whatever comes first to your mind. No judgments here at all. Are there any books, podcasts, or resources that have had a profound impact on your life or career?
So not one thing, lots of, I'll read a lot. I keep picking up things, but I think
Yes, I
Charlie
can see
Munger.
that in the
Uh,
background.
Uh, yeah, it's one of the several bookshelves at the house. People are really, really tired of seeing books everywhere. But Charlie Munger, I think, and his writings have meant a lot. I've read a lot about decision making. It started with Thinking Fast and Slow with Daniel Kahneman. Lots of them, but I think reading just kind of allows you to do a lot. Love reading, but nothing one I think was something which really stands out, and kind of I would say that this is it. They shape my thinking, and then I want to move to something else and read something else.
Great. I think Charlie Munger is a worldwide favorite with so many people. Who's had the most formative impact on your life?
So maybe not who, but what. So I went for Vipassana about 8, 10 years back, and I think that really had a dramatic impact on the way I viewed life. Uh, it brought in uh, uh, spirituality or seeking spirituality in me, which was not there earlier. I don't think I'm very spiritual even now, but I think there is that awareness of slight meaning of life, what you're pursuing, why you're pursuing, where you're going towards, and lot of the some of the values that I was taught during that period really really appealed to me, and I've tried to imbibe that in the way I'm living life. So that that event, and it just happened, and I think it was a great thing. I would tell everybody, anybody that I've met, I've had conversation with, that this is a must experience for people to do.
Yes, fun fact, even I've done Vipassana. I think,
Oh, very nice.
it really has a very profound impact on how you approach life altogether. One professional and one personal goal over the next year.
I just told you I don't like to put professional goals. Professional goals, annual for an investment firm is a very bad one to have. So no goals per se for the next year for Prath or as a professional. Personally, I think because of a lot of being on the road, I think one area where I have not worked as much on myself in the last few years is my health. I would want to be fitter than what I am over the next year, and I think that will bring me great joy if I'm fitter than what I am today.
It's surprising that most people, when they talk about their personal goals, talk about this aspect quite a bit.
Yeah.
What are you most proud of?
What am I most proud of? I think my family. There is my wife and my kids, and what we have been able to achieve with the way our kids are shaping up, and it gives me great joy to see them grow as human beings. Uh, I don't want to take a lot of credit here in terms of the way they're shaping out, and I have a son and a daughter, and uh, both of them have very different and great personalities. In fact, I learn a lot from them, and my wife. Each one of them live life in and mean so much more to me, and they have achieved so much in such short span of time. My kids, that I'm really really proud of them.
I was wondering if all your Gen Z insights were coming from there.
Yeah, my daughter for sure. She's 11 years old. I think she's more of a Gen Z than anyone else that I know. She's a hardcore a consumer. She wants to buy everything available, and at the same time has such strong views on brands, on products, and it surprises me. I think even now I will be happy to get whatever, lot more discerning on personal consumption than what she is at her age.
Amazing. If you were to write a book about your life, what would the title be?
I don't think it would happen. I don't think I'm gonna write a book on my life, but uh, I would like to think about myself as someone who is always striving to get better. This is something that all people who know me well will know, that I I genuinely work hard at anything that I want, that I'm doing. Like, it could be just basic interests. I've been a poker player now for 8, 10 years, and the amount of work that I've put off table in poker kind of really surprises people. It's that's my nature, to be strive to become better. Uh, Also, at the same time, I have been. I would like to think that people can depend upon me very easily, both family, friends, professionally, and that's something that I would like to continue to be. So these are the two things. I don't know what would be the name of the book, what would it be called, but these are things that define me somewhere. Whatever can capture the two of them.
You can probably call it Kaizen, continuous improvement by the Toyota way. Yeah. What's the kindest thing anyone's ever done for you?
I think I've been lucky in terms of the way that I've found a lot of good people around me who've been kind to me, have tolerated me for a very long period of time. So it's a lot of things that people have done, but uh, not one act. But I think I genuinely feel the kindness which Sudhir Chatterjee has shown towards me right throughout, in terms of first allowing me to become a part of that journey and learn so much. Then there is this acceptance publicly and privately of the role that I have played in Safari. While I think investors can only kind of play a very minuscule, maybe 1% of the role, not more than that. Maybe that's also an exaggeration, but there is just that acceptance, and it feels good to be recognized. And then he's always kind of pushed me down this path. He has encouraged me to say that, okay, you have it in you, why don't you go down this path? So in that way, I think he's had a lot of influence. He's been very kind to me, and a lot that I'm today as a professional, I would like to owe to that.
Amazing. What a beautiful thought to end the episode with. Thank you so much, Piyush, for taking out the time. I really enjoyed this conversation with you, and wish you lots of more success with Prath and how you are building it forward. And look forward to co-investing together as well with you.
Thanks, Shrishti. I look forward to doing that as well. Have a lovely day.